Hey guys, Steve here on Friday night with the weekend update for Saturday, August 16th, 2014. Hope you guys enjoyed your week. Hope you had a good week in the markets. Really going to prepare now for next week. As we always do, we're going to go through our positions real quick, go through our new watch list, and I want to just point out a few things and some closed stocks that we exited, and also just take you through a couple other what I consider Megatron stocks, the mega momentum stocks that I have on my watch list, just to kind of give you another insight into market internals and where I think maybe this market's going to go. So real quick, looking at the S&P 500, we had some news that came out during the day. I guess the situation between Ukraine and Russia was escalating. Markets moved down pretty quickly on that news. But if you look at where we closed, again, this is if you look at the candlestick pattern tutorial that I did this past Tuesday, this is called a doji. So basically the fact is we moved down to 1937. We were up at one point to 1961, and we closed basically right at the open. We were up about a quarter of a point on the S&P 500 at the end of the day. Normally that signals a reversal if it was the other kind of way around, where the close was and the open were more in the lower portion of the candle. But in this case, the fact that we got that news and we're able to rally back and close basically unchanged for the day, when the market could have easily been taken out. Look at what happened last time this news came out. We were down almost 200-300 points on the Dow, and about 30 or 40 on the S&P. This could have easily happened again. We had every reason to do that, and the fact is we didn't. And to me, that kind of signals a little bit of the insight into where professionals think this market's going. I personally think we're going higher. If you look at the weekly chart, we're bouncing off that trend line support. We're almost back at the highs. Look at the NASDAQ. The NASDAQ is making new highs. All right, we're basically breaking out. So if you were a futures trader and we got a little bit more of a push higher, you could enter a position and put a stop down here at 38.58 and enter at 39.86. So yeah, you would have a wide stop, about 100 points, but that's the same kind of setup that we look for in stocks every day. So it doesn't matter if it's futures, ETFs, anything. If you're trading the setup, it's the same setup no matter what the ticker is. You can basically wait the ticker out and trade it, based off the technicals. So, as far as where I think we're going, I think we had every opportunity to move down, especially today after this week-long rally that we had starting from last Friday. We didn't, so I'm fairly confident we're positioned on the right side of this, that we're positioned 100% long. We're using margin, we're over leveraging a little bit. So I don't think this week coming up we're really going to be looking at taking too many more positions, just because at this point we are at about 170% of our allocation, meaning we're using 70% margin on the account. Again, Thinkorswim doesn't actually keep track of this for us as far as what the fees would be, but this is something that I think in a shorter term trading, where we can get some leverage on our money, for especially when everything seems to line up perfectly, or as best as possible, let's put it that way, that I think it's okay to use some margin. So like I said, we're using about 170 or 70% margin. We're at 170% allocation. We have $3,000 in open profit. We have $9,700 in risk on the table. And I think this week we didn't close out any trades this week. They primarily all came from last week. But one thing I did want to point out is if you look at the profit and loss of the R values, you'll see here that our average open is 0.35. You can see right down here in the screen. And you'll also see that our losses 0.02, 0.03, 0.07, 0.08. See how the losses are very small, winners are somewhat bigger. That's the whole point of trend following, all right? Small losses, keep them small, let the winners run. So with that said, let's look at what our positions are. Again, we're our biggest position, our best position is AMT, followed by ADM, EQR, and then everything else is pretty much between $100 and $200 profit to loss. Position wise, we'll start with Apple. Okay, Apple continues to bounce off that trend line support, or 50-day moving average support. All right, we basically had this consolidation. We had a breakout. So we had a secondary consolidation after our entry. Here was our initial entry. Consolidated again, broke out again, moved higher, came back, tested the 50-day moving average. It did break trend line support, tested the 50-day, now moving higher. We're within 2 points of all-time highs. $100 is the next price target that I'm looking at, or resistance point that I'm looking at. But right now we are going to raise stop. Our stop is going to be raised to, let's put it right at this breakout level, 94.30. All right, so we're basically locking in. Actually, we're not locking in any gains yet. We entered probably right around 96.11, I guess. Let's just check that real quick. Apple open price 96.33. So 96.33 is where we entered. But like I said, I think at this point we come back and break down through this 94.30. We would break the 50-day moving average, as well as put in a lower high and a new lower low. So I think at this point we can be fairly confident to raise our stop in Apple to 94.30. ADM continues to move well after earnings. We moved our stop this past week to 46.38. All right, so what happened was we entered here. We had this nice breakout, came back, tested the breakout level, tested the 50-day. Earnings came out, gapped higher, and now we're sitting well above channel resistance. I'm looking also now at the resistance coming up on the weekly chart in the channel. So right now I think a new trend line can be drawn using these 2 points. All right, a little bit more of an aggressive trend line, but the 50-day is right there. Stop 46.38 is a good level because, again, we would have to break this new trend line, this previous low, and the 50-day moving average to exit that trade. AMT, I think this is our best stock. Yeah, up 2.7 R. So on this one, we're basically looking at a secondary breakout, a test of that breakout level, and now a continuation higher. We had these 2 days where we reversed. We talked about this candle here as showing maybe a reversal signal. We came back, tested this little breakout level, and are now moving higher. Again, this one is a little bit more difficult because I really want to raise our stop level. But it's tough because we're going to raise it to this level right here, 92. All right, so we're going to raise our stop to 92. The problem now that comes in is if it doesn't want to move. Anyway, we'll move that later. The problem now comes in is if we come back down and test that trend line, it's very difficult right now to draw a new trend line because we're so far extended from the 50-day moving average. All right, so the issue that we're running into is while we could still draw a trend line, something along these lines here, and come back and test that, even if we broke that, it really is meaningless at this point because what I'm looking at is we're so extended above the 50-day moving average that I really think we need to put in a couple solid weeks of consolidation. I would love to see AMT move sideways, even if it's between this $100 level and this $95 level. Let's just move sideways for 2-3 weeks. Come in, let this trend line catch up, let this 50-day moving average catch up, and then have a breakout after that, and it's a much better setup for longer term growth or movement higher. I think in all honesty, if we continue on this accelerated trend, first of all, it's very difficult to set stops. You could have a stop here, 94. You could have a stop here, 96. But the fact is, it doesn't necessarily mean that the trend is over if those two levels break, because we're still well above this 50-day moving average. So I think the best case scenario, like I said, we consolidate between 195 for a couple weeks, move sideways into this trend line, and then bounce higher. Then we could bring our stop all the way up to this $96 or $95 level, whichever it may be. And I think then we can make a real push towards the $100 level and hopefully well past that. APD, American Air Products. Again, we talked about this the other day. To me, this looks like it's starting to just put in a little bit of a rounded base here. We're coming into trendline support. We're testing this breakout level, but look at what's happened over the past week, where this 50-day moving average is starting to come into play. All right, so I think if we can now maybe move again, still continue to move sideways for another week, let this 50-day moving average catch up, and now break out, then we can raise our stop to this 131 level and see where we go from there. At this point, 127 is a good stop level. If you're an aggressive trader, you probably could move your stop to this 128.75. I'm going to actually leave it right now at 127 because I still think, if we broke this level, we would come down and want to test this trend line. So, but the way it looks to me, when you look at the weekly and you look at this little rounded bottom, think of it as having a circle in between it, that we're starting the left side, and now I'd like to see the right side continue. And maybe it's a little cup and handle pattern where we have this rounded base, put in a little sideways bull flag, and then break out from that. Disney. Entered Disney actually this morning on a breakout over this $87 level. Here was our, we had a couple days where it was close. Finally got the breakout yesterday and entered today. And it's a profitable trade already. But if you look at the weekly chart, it's a great looking setup. Right, here's our weekly chart. We had a little consolidation. You can even say you have a little consolidation again above that. And this daily consolidation here that we finally broke out of. So we have this trend line working for us. We have the 50-day moving average working for us. And we have the weekly trend line working. So our stop right now is under 85, which sits right under this little sideways consolidation. I think if we break 85, that would obviously break weekly support. It would also break this trend line. Let's just adjust this a little bit. Something like that. So we'd break that trend line, we would break 50-day moving average, and we'd break the previous lows of that consolidation. So another great setup, easy to identify stop level. And let's see if Disney can work its way higher through the winter. EQR. Moving nicely higher on the weekly chart. Okay, we had these couple little consolidation areas. I think that may be what's happening here, as you can see by this daily chart. This gray box is what I consider to be new consolidations. We were able to raise stop to 63.16, which is right above or right below this little consolidation right before the breakout. Essentially, the reason we were able to raise that is we had this pullback. Now we had to move higher. So again, if we break this 64 level, we would come back in, and then we would also need to break trend line and 50-day moving average and this small little consolidation. I think if we broke all three of those, again, sometimes it's nice to visualize with a fake candle. I think if we were to break something like that and have that candle be, you can visualize it there. That to me looks like trend is over. Trend has ended. We're down around 62.5, which puts us below the weekly trend line higher. So again, I think that's a good level to have. You could probably, if you really wanted to, set it at 64, but again, you're above the 50-day moving average. So for right now, we're going to keep it at this. Again, it's not a great area, not a great consolidation, but it's a reference for our stop. So we're going to set it right at this 63.16. Expedia broke out from this consolidation from this weekly chart. again, I'm looking at on the weekly chart as something like I talked about with, I think it was APD. Yes, APD. So on Expedia, here's this kind of cup and handle that I was talking about. So again, here's your left side, then it starts to round out. Here's your cup, a little bull flag, as you can see by these 3 or 4 candles sideways, and then a breakout again. So here's the cup, here's the handle, breakout higher, continuation of trend. So I still think Expedia is a great setup. And the whole idea here is we don't want to micromanage these trades, guys. We want to basically put them on, let them run, manage our stop levels, manage our losses, but let the stock run as far as much as we can. I think for Expedia, if we can get a breakout over this 86 level, our next stop level would be 79.44. So we'd raise it almost 2 points, and take some of that risk off the table. At this point, I think we could still come down, potentially test this 50-day. So I don't want to move it yet. I want to see a confirmation with a breakout over 86, move stop to 79.40, and then again, eventually we can move to 82.50 as we move higher. Fidelity bounced off the 50-day moving average today. We were close to being stopped out the other day. We had our stop here at 54.71. We actually just moved it higher to 54.86. We're coming into that level. I think now, if we, like I said, if we were to reverse, again, put in a fake candle, if we were to do something like this, that again is something that, to me, and should be to you as well, that's a lower high, which would be here, and now a new lower low. Trend is reversing, trend is going back down, and we don't want to be involved in a stock like that. So for right now, stop 54.86. Again, if we can get a breakout higher over 57, that would kind of negate this little pullback and, basically say to us that the trend is back, moving higher. Weekly chart, we're right at that trend line support. So I really think, again, over 57, we would be a confirmation that this weekly breakout is now moving higher, and we're on the right side of the trade. Remove drawing. Okay. H&R Block. We had a breakout from this downtrend line, moving higher. It's consolidated essentially since our entry. We entered here on the 12th, right around 33.30, and right now we're at 33.20. So not much has happened. Again, don't remember, I always talk about when we get this break of a weekly chart, a lot of times you're going to have the daily chart consolidate again and move higher for a setup. So over 33.65 would be a great sign that this breakout is legit and it's not a false breakout, and we're going to move higher and along this trend line be able to potentially adjust stop to this 32 level, and then maybe we can use this level as our next stop at 33. Southwest Air, this was another one we entered today. Again, if you look at this weekly chart, this rally that has happened since September of last year was all based on this consolidation on a weekly chart. Okay, it consolidated on a weekly chart, broke out, and that started this move from 14, basically a double, 14 to 30. The way it looks right now, it looks like it's got a lot of juice left in it. Looks like it's got some momentum behind it, and we were able to find a great spot for an entry. Now, just because we found a great spot for an entry doesn't necessarily mean it's going to work out for us, but we have, the entry is an important aspect to your setup and your positions. As long as you can trade that setup and feel confident that you're limiting your risk and you know what you're risking, the amount of gains and positions that contribute to your overall portfolio gains is endless. like I said, as long as you're setting, have a good setup. That's the most important part, and don't try and deviate. Have your go-to setups that you like. Everybody's going to be different. These are the types of setups I like. These breakouts, especially something in LUV that looks great, but it could also turn into a UMP that also looked like a great setup and it failed, right? So same thing could happen here. But as far as LUV goes, again, that was entered this morning. Stop is at 27.50, and we'll see where we go. RSG, this one again moved lower with the news today. Closed back at the highs. New 52-week high in RSG. So I think we're got a good setup here as well. Stop still down here, 36.84. I think maybe next level could be this 37.68. But again, I'd like to see where we go. If this came back, tested, this area again, this 38, and then moved higher, then obviously the 38 level would be our next stop. But, so for right now, I think we just kind of let it ride. Again, look at the weekly setup. You had this breakout, and then you had this daily consolidation, and now you have another breakout higher. So this is confirming that these breakouts are in fact breakouts and not false breakouts. And now we have some data points to base our trades off of. So for right now, 36.84. Under that, we're out of the trade. And last position that we have on is Tesoro. Tesoro we entered right here on the 11th at the open, which was 63.43, and right now we're trading about 50 cents lower. Not a huge deal. Stop is down here, 57.20, I think it is. Next stop level would potentially be 59, and then again, if this proves to be a true low, then we would be able to move all the way to 62. But that'll come in time. You could see what we're breaking out from this weekly box. We're gonna have to deal with this little resistance area back in here between 63 and 65. And for right now, though, we're at, I think this is 52-week highs, or it was yesterday, I guess, would be technically the closing 52-week high. But again, we have some data points to base our trades off of, and we're going to use them as we go forward. All right, so let's take a look at the watch list for this week. I'll be honest, it's very similar to last week. A lot of our trades that we identified last week held up well throughout this week. None of them really broke out, except the few that we took in Southwest, Disney. We talked about Marriott. That was one that broke out yesterday, but we didn't take it based on our allocation. And like I said, I don't think we're going to really be taking, unless something unforeseen happens, I don't think we're going to really have the opportunity to take too many more trades, just because we're pretty much maxing out the portfolio. I don't really like to go over 50%. The fact that we're our 70% margin, to me, is kind of a little bit of a red flag. But like I said, I think we have the wind at our back with the way the market's been acting. So I wanted to take a little bit of advantage of, the margin aspect of the portfolio. But like I said, I don't think, that we're really going to be adding too many positions this week. So like I said, the watch list is essentially, I think there may be a difference of, 5 or 6 stocks. So I'm going to run through them real quick. The ones obviously that are new, we'll go through real fast and kind of mark up with some trend lines and some support areas. APA, Apache, again, we're in this consolidation area. We had this breakout from the weekly chart. We're now breaking out of this, or we're now putting in this daily consolidation area. So, essentially over 103 starts to look interesting. APC bouncing off the 104, 105 area. Again, looking at the weekly chart, it's definitely on a nice trend higher. I think, over 112 looks like to be the trigger for this, with a stop under 105. Broadcom, still moving sideways. We're basically right at that weekly resistance area that we've drawn in, sitting right above it. So this is another good looking setup over 38.70, and that would be a great entry point. BXP right along that trend line, pushing up against the resistance at 121.85, and then if you guessed it, over 121.85 would be a great entry with probably a stop under the 117 area. CVS is also one that's basically is breaking out. Again, I would like to see, similar to Disney, something a little bit more substantial, I guess. I don't want to see it really limp out. I just want to see it push through and not look back. So, I would say that we're probably over this 79 level, 79.50, I guess we can call it, where these two tails are, would probably be a good spot to initiate a position. Dow moving sideways. This could potentially be a lower high if we turn around and reverse and push through that 50.97 level. But for us, over 54 looks to be a good spot to initiate. DPS, Dr. Pepper, again over 62, under 58. Those are really the two levels. Estee Lauder moving sideways. Right, basically, if you look at the weekly chart, we have this nice long base that we're putting in, and now we're starting to put in a higher base, which is identified here. So over the 77.34, I think is 77 is probably a good spot to get long, and then we can use this 73 level as our first stop. General Dynamics, this was one that we added this week. So what I'm looking at here, this is an industrial as well, which I think we're pretty much tapped out of, but here's that trend line on the weekly, and we're putting in this nice consolidation on the daily. You can see that right in here. So essentially with this one, I'd be looking at a breakout over this 121.50 and then setting a stop under 114, so a $7 stop. Not bad for a $120 stock. And here's that same trend line that we were able to draw on the weekly chart. So you can see that this did break down through trend line support. Now maybe it's testing the bottom side. Maybe it's going to roll over and come back through. But right now, as far as we're concerned, it's in a consolidation area. The next one is General Growth Properties. This one I was looking at it breaking out from this weekly consolidation. Okay, this you could even probably draw it back even further, almost maybe 2 years. So something along those lines there, where it's really been consolidating for, let's see, this is August 20th, 2012 to, let's say the breakout was here, so just about the beginning of May. All right, so we got the breakout, and now what's happening is now it's starting to digest those gains on the daily chart right through here. So with this one, we would be looking for a breakout over 24.30, and we would probably have a stop down here at 23. So that's really that setup there. But with the way this moved so quickly off this 22 area, I would think it would have a hard time, and if it did break out over 24.30, that it may consolidate. It's got to consolidate at some point, I guess is what I'm trying to get to. It's either going to consolidate below 24.30 or above 24.30, and then break out again. Green Mountain, we've had this on the list for a while. Essentially it's just moving sideways, but like we talked about, I think we've talked about it almost every weekend that we look at this chart. I always said that I thought this would move back to trend line support on the weekly. So that's exactly what it's doing. It's moving into this 112 area. I think, if you were aggressive and you got a little bit of a bounce over that 112, maybe say it goes to like 117, you could probably put on some of your position there. And then if you eventually got that breakout over 126, you could finish up the position, do it in two lots, and build your position that way if you wanted. But the way I'm looking at this is it really looks like that 112 area, 110 area is some solid support, and then just within the box you could pick up 10%. HCP, again moving sideways, broke that trend line, but again, this is something similar to the Amazon trade where it was in a downtrend, started putting in some higher lows, and then eventually is potential to break out over that 42.66 level. Hess is one of the best setups that we have on right now as far as I'm concerned. That, Broadcom, CVS, a couple other ones, but I like these real tight consolidations. It was the same as Disney, it was the same as UMP. A lot of these have these really nice tight setups, and especially when they come into trendline support and moving average support, that I think it has a little bit of more potential to pop higher. So as you can see, that $100 level is really containing Hess right now. I think if we can get a move over $100.5, then obviously stop would be probably right here at 96.42. Kroger, again, same thing as Hess, a real nice tight setup. Over 50.90 would be a great spot to get in. 48.75 area is a good stop level, initial stop. Lockheed Martin, this one kind of breaking out from the weekly. Again, if we can get a push over this 170, I think you could potentially go in and set a stop down here at 162. Right now, again, I think if I remember correctly, industrials were we're at 25%. You could see here at discretionary we're 42%, which is a lot. Disney took up a big chunk of that. Today, Disney's almost 18% allocation. And what's this one? Fidelity is 22. So those are our two biggest positions, and AMT. So that's why our financials are through the roof too, is the two allocations that we have in Disney. I'm sorry, in AMT and Fidelity. I'm sorry, Fidelity. Sorry, Fidelity is a technology company. I keep thinking it's Fidelity like the bank. That's the point, guys. You don't have to know what stock you're trading. Just trade the chart. Macy's moving sideways. Over $60 is a good spot. 55 is a good stop. MCK is one we've had on before. Kind of, we took it off, and now it looks like we had maybe a little bit of a false breakout. I would look at these levels here as a new consolidation. Okay, let's take this off, activate this. So I would look at this as a new consolidation area. It looks like we had a breakout on the weekly. Now we're really looking for that push over 196, 195.50, and then again stop would be 186. Mead Johnson, this was one from last week, moving into trendline support, 50-day moving average support. So over 96. Was this 96.50? 96.25 would be a good entry point. 91.50 would be a good stop. National Oil Well. This is one that a little bit of a different setup. This is similar to H&R Block. I'm looking at this nice uptrend line. You could see here we had this nice rounded bottom. Maybe this is the handle, but I'm looking at this little consolidation here as a way to maybe start a position. So over 82, under 80. So maybe you put like half a position on over 83, and then you put your other half on over 86.20. Just a different way to look at it. Not my ideal position, but it's a setup nonetheless. PSA, Public Storage, we had a breakout moving sideways. This one I'm kind of still, I still think it looks like it wants to move higher, but at this point, again, this is another financial, so most likely won't be taking this trade. But for right now, again, if you had this breakout over 176, you could set a stop down here at 171 or potentially down here at 169, depending on how much room you want to give it. A couple more here. PSX still moving sideways. Schwab still moving sideways, right in the middle of the range. Seal there, testing that breakout level. Sloppy pattern, as far as where it is on the weekly. On the daily. The weekly looks nice. It's moving sideways pretty much in a well-defined box. The daily chart has a couple of these, where earnings pops higher and then closes lower on earnings day, and then it seems to go back and test those levels. So, again, if this one broke out over 35, I think you would want to set your stop over here at, 32, which may be a little bit too wide for a lot of people. And I think that's over 10%. So that would probably be a pass just because it's over 10%. And when I say over 10%, that's, over 10% from entry to stop level. So I like to keep it like 8%, 8 to 10% max. Simon Property Group over 171.50. Again, stop level would probably be down here 163, or if you were a little bit more aggressive, it could be 165. WDC, this one again broke out from the weekly chart, moved higher. Now it's consolidating again. We had a couple maybe breakouts that almost happened a couple weeks ago that didn't come about. So it's still consolidating, moving sideways, and similar to what I was talking about with American Tower, this is kind of the setup I would want to see out of American Tower. Let this thing move sideways and look at now what's happening with the 50-day moving average. Okay, look how extended it was here at on July 11th. All right, look at where the 50-day was, and now look at where it is now. See how the gap closed off a little bit more. All right, so the more that this continues sideways, it allows that 50-day moving average to catch up to it, break out higher after that over 102, and that's a much better setup than if it were to break out back here at, on the 31st or anything like that, because the breakout is so far away from the 50-day moving average, it's tough to sustain. So what Western Digital is doing now, in my opinion, is what American Tower needs to do for us as well. Okay, it's got to do that sideways movement. Of course, we want stocks to go to the moon, and we want them to do it now. But for longer term health of the trend, I think this is the exact kind of setup we want to see out of AMT. And actually, to be honest, this is one of the better setups that we've seen in this whole weekend update. Besides Hess and Kroger and Broadcom, I think this can be marked off as one of the top setups for next week. And last one is Williams, again moving sideways after this huge gap higher, still holding on. 50-day moving average is now there, and the trend line support is now there. So those are our stocks to watch for this coming week. And now I just want to go through a couple of what I consider Megatron stocks, just to show you guys something for health of a trend as far as I'm concerned. So here's my Megatron stocks: Netflix, Celgene, Solar City, LinkedIn, Apple, Tesla, Amazon, Buffalo Wild Wings. CMG is Chipotle, right? Yeah, Chipotle. Google, Baidu, Facebook, MasterCard, Priceline, Twitter. So I just want to go through real quick, and I'm not going to spend a lot of time, but the only thing I want to show you is look at how these stocks are acting. Okay, these are the high momentum stocks. These are the ones everybody loves to trade. These are the ones that make you rich overnight, and they're all almost all of them. I would say 90 to 95% of them are setting up great for next week. Netflix breaking out. Celgene pushing up against resistance. Solar City consolidating. LinkedIn, look at the move LinkedIn made. Okay, we had this move here. We had a break of a downtrend line, and basically here was however you want to draw this box, broke out over 170 and is now sitting at 219. Okay, so that's like a 30, 40, a $50 move on a $170 stock. It's like 30% in a month. Apple, again, that's when we're in setting up great. And the only reason we're in Apple is if you look at this column here, guys. I don't know if I can highlight this. Yeah. Apple is the only one that has a yield. All the rest are zero, except for MasterCard. So one of the criteria for getting on our watch list is it has to pay a dividend, because we're in the stocks for so long. Why not make money just holding the stock? Tesla breaking out, 52-week highs. Amazon testing. That was one that's not so great, but it's moving higher. Buffalo Wild Wings, not so great. We're not going to show you that one. CMG, new highs. Google, testing the 50-day. Baidu, new highs. Or not new highs, but close to new highs. Facebook, setting up, if Facebook had a dividend, this would be a great stock. I would love to own Facebook, especially for the model portfolio. But again, this one's setting up and broke out, consolidating, setting up. MasterCard, not so much. Priceline, it's there. Twitter, setting up. Okay, so as you can see, I would say, like I said, about 90%, maybe 10 out of these. I don't even know how many there are. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 16. So say 10 out of, or 12 out of 16 are moving higher, setting up great. So that's something else that I look at for, market health. So the fact is that the reason those are setting up is because they're holding up well, and when the leaders hold up well, the others follow because the market is holding up well. So, that's my logic. I don't know if it's 100% accurate, but I like to look at the leaders and make sure that they're contributing to the health of the market, because if the leaders are not and they're all going down and the market's still going up, there's a divergence there, and that's something that, either something has to give. Either the market's going to follow the leaders, or the leaders are going to have to return and follow the market. And normally, when the leaders are being sold and the high momentum stocks are being sold, people are moving into cautious stocks, something like a Procter & Gamble or a Altria or something like that, because they're concerned. And when the leaders are making highs and pushing highs, that usually means that there's not a lot of concern, and they feel that the market and the leaders are going to move higher. So with that said, I know this one ran a little bit longer than normal. I hope you made it to the end. If you did, give yourself a pat on the back, because it's a long one. But again, it's a great plan for next week, a great setup that we have going on. I think market moves higher. I think our stocks are positioned well. I don't see at this point anything that concerns me with our stocks. Maybe Fidelity is really the only one that is close to testing our stop. But again, I think we're at a good point. I think next week is going to be a good week with the market, that maybe we could test those highs that we fell from on the S&P. I mean, we're not far away, and like I said, with today's action of closing right back up into the top of that range, you think 1980 is not too far, and then once we get through 1980, maybe 2000 is right there. So I don't think the S&P's ever hit 2000, but on this trend, it looks like that's the next logical stop. So, guys, have a great rest of the weekend. Follow me on StockTwits, Twitter, Google+. Subscribe to the YouTube channel, and subscribe to the nightly newsletter to get all of the videos, links, and everything when they come out updated right to your inbox, to your social media accounts, just so you're aware and you're current with everything that we are going on. And have a great rest of the weekend, and we'll see you next week.